Let's shift focus and get you a sense of what's happening on the M&A side. Blocks galore every day, single day. So lots of supply hitting the street, promoters, early investors, private equity, you name it. What about actual M&A transactions? Will we see a pickup there as well? I think that's the question that we want to address, and we'll sort of talk about all of this. We have two gentlemen really at the top of the food chain as far as investment banking in the country goes, Nitin Maheshwari and Ravi Shankar of JPMorgan. Both are managing directors and co-heads for their India investment banking business. This is JPMorgan. Gentlemen, great to have both of you here. Thank you very much for joining us. With regards to JPMorgan, there is the SMBC's acquisition in Yes Bank. I think the JPM team was involved on SMBC side. The other one was the CEAT acquisition, of the recent acquisition in Canada which you did. I think you guys advised CEAT. Correct me if I'm wrong. These are details.
No, we didn't advise.
Oh, you were not involved. Okay.
There's a lot of action going on, but not that one.
Okay. Tell us a little bit about what the team has been up to on the M&A side, and then we'll sort of spread out the discussion on IPOs and capital market transactions.
Yeah, let me take that. First of all, thank you for having us here. So what's happening on M&A side, if we think of our client sets, right, there is the inbound M&A where private equity has been the most active. And there are two specific areas, the Japanese inbound into India and the Middle Easterns, right? So that's two areas of inbound. Outbound, we're starting to see selectively our clients picking spots, picking areas of expertise or technology, and then making those acquisitions. These are not multi-billion-dollar acquisitions, but these are small niches which our clients are buying into. And third one, private equity, where we're trying to see, it's continuing to see, let's say, consistent activity, which is driven by confidence in businesses, confidence in talent, and ability to exit, which is what's driving a lot of the M&A deal activity right now.
How is it compared to the last couple of years? I mean, volume-wise overall?
So volume-wise, I would say this year is as good as the last year. Now, given the activity in the public markets, that public market alternative obviously has taken the front seat, but we're seeing public markets actually enabling M&A, as it gives confidence to our clients to go make acquisitions, gives confidence to exit investments that they've made. So public markets as an enabler, but volume-wise, I would say it's consistent over the last couple of years.
Now, gentlemen, I'd want to sort of bring in the whole Trump effect and how that's shaping and reshaping your world. Just thinking out loud in terms of common logic, you'd imagine that with so much conversation on shifting supply chains and where you need to have additional presence, if I'm a manufacturer and I'm going to be hit by tariffs, I'm guessing some of those conversations are starting about whether I can buy an asset in a geography which is perhaps less affected by tariffs. I don't know. But, are those conversations happening? Do you expect M&A to get a further boost just because of the way the trade disruption is shaping up around the world? I don't know. Ravi, Nitin, anyone?
Yeah, no, absolutely. So, look, I think this is actually a very big theme right now in India. And I think it's a once-in-a-generation opportunity for Indian entrepreneurs to really take advantage of the supply chain disruption and the China Plus One strategy. Yeah. And I think the other boost they are getting is the way their own stocks are trading, which gives them the acquisition currency to go and acquire things overseas, which are actually trading at a low multiple. So I think they're both the opportunity and the currency that they have. And both of them, we are already seeing a lot of activity and discussions.
So which are the hot sectors? Where do you think we'll actually see some M&A action, maybe outbound this time, as Indian companies redesign their production?
I think manufacturing, electronics, a lot in the supply chain around rare earth. I think all of that will be highly
And which
attractive.
are the target geographies where we might see some announcements?
So we see Europe, we see a lot of activity in terms of outbound, simply because there are a lot of assets which are owned by families which are going to come up for potential exits. So that's where we are seeing most of the action.
And just, again, I'm sorry, bombarding you with a lot of questions here, but just because this is the new thing and we should be prepared for what we see, maybe. So we're talking about a gestation of what, deals within 6 months, 12 months? What would be the average size of these very small ticket niche acquisitions, or could they be ambitious buys as well?
Look, I think Indian corporate has been very disciplined about it, but at the same time recognizing the potential. So I think it won't be the $20, $30 million. At the same time, we are not looking at multi-billion-dollar transactions. So I think you think about it, $500 million to $1.5 billion, $2 billion. But I think that's how you think about it.
All right. Hi, gentlemen. Good to have you all in the studio. Thanks a lot for coming down. Well, Nitin, I'll come across to you. You know, we thumb the table and say that the domestic liquidity is very, very strong. The SIP flows as well have been moving up. But on the flip side, if you just look at the last few sessions, you know, you'll see on a day-to-day basis, it's close to around $1 billion of paper supply that's coming in there. Wow. You know, I, for one, I'm looking forward to that earnings season just to see this stop, because the kind of supply actually is getting excessive. How do you read this? One would say the depth of the market is good, but the problem is it's getting a little bit excessive. Your turn.
So in terms of, if you see the number of large transactions that are coming in, we've been involved in a number of those, we're seeing that as a consistent shift of ownership of companies by large promoters / MNCs into the public institutions or the public shareholders. So it's a natural shift that any market goes through. So there should not be anything surprising about that. But if you compare, let's say the last 6 months volume is $20 billion, the SIP flows or the domestic institutional flows is close to 35 to 40. So from a demand and supply perspective, we're in a reasonable zone. There are a number of big companies who are looking to access public markets in the next 6 months. So we are not seeing that imbalance, to be honest. It's a natural
You wouldn't
shift.
be worried as of now?
Not at all. As of now and later as well, for all the supply we see from our clients, I think there's reasonable demand from institutions who want to own some of these high-quality companies.
And we should not take eye away from the fact that while there is a $60 billion roughly capital funds flowing into Indian public market from domestic, there's a $40 billion private equity capital coming every year into India. And that's, you know, in a way you can consider FDI, but it also kind of bulwark against how public market kind of goes up and down. So I think that's a total of $100 billion, which is out there.
You know, either if you want to take it, not exactly your domain, but this FDI question, right? Any way you cut it, when FDI flows have been coming off very sharply. How do you? I mean, is there a nuance here, or are they just coming off? I mean, what's the sense?
Look, again, you know, it's the way you define FDI. To our mind, private equity putting money in India is also in a way FDI. Now, if you look at total basis, I don't think there's a big kind of up and down, but for sure, depending on the cycle, you will see a US or European company focusing on kind of local markets simply because there's so much happening in each of these markets that sometimes they just need to focus there. But broadly, if you think about India's emerging market, just the macroeconomic stability it provides in no geopolitical tension and then the kind of policy stability, I think this is a market where people will come back to again, and this will continue to flourish.
Any thoughts on that?
I would say just one thing which is relevant for global MNCs in India and Indian MNCs outside India. You're looking to do business where you already have a meaningful presence. So MNCs which have been here for a long time, they are continuing to invest. Now, whether that investment is through M&A or not is, in my view, irrelevant. They're investing in new capacities, they're investing in talent, and same thing for Indian MNCs. So I think FDI is I won't look at it in number format with respect to, let's say, whether dollars are coming in or not. The fact that Unilever or Nestle is investing in new capacities in India is also FDI. I think the good news is that the businesses are so large that they're able to fund their growth through their own currency. Right? If they have to make an acquisition, they can use the Indian capital markets to fund that. Is an important aspect of evolution of our market. And that's how we should think of FDI.
You know, just one, what Nigel said about all these, just to go back to that blocks question. Have you looked at what promoters and especially promoters are doing after they sell their shares? That'll be an interesting thing.
Enjoying life? Sorry.
Are they already enjoying life? Are they buying, and this is
Rooting it back into the...
Yeah. Are they buying other equity diversification for themselves? Is there any
No,
data?
absolutely. So look, I think if you look at some of the large groups which are going and acquiring things, obviously that needs to be funded. So if somebody is investing in a Coca-Cola bottling business, they need to fund it, and that's where they're seeing capital coming out from one of their portfolio companies. So I think that's the common theme we see across across various segments. So it's not that they're taking it away
and no entrepreneur is relaxing. They're using that money and reinvesting in new business initiatives.
That's good to know. That's the bottom line. That's really good to know. But, gentlemen, you're in the thick of the deal-making business, right? And I have to ask you about the price and valuation question, because that's, I think, top of mind for investors into this market. We keep hearing this, that valuations are never cheap in India. And this is a time when we are seeing a lot of exits. Stage one investors, private equity, or even promoters for that matter. What is your interpretation of valuation? And this is happening at a time where the firepower or the powder with domestic institutions, it is coming down. I mean, they're maintaining a brave face, but from getting 40,000 crores every month, now they're getting less than 20,000 crores. So in terms of the supply, the pricing, and those conversations, I mean, how do you rate the dynamics?
So look, I think if you look at just the MSCI India versus MSCI EM, and you go back 10 years, India has always traded a premium, anywhere from 50 to 80%. So this is not a near-term phenomenon driven by a certain capital flow. This has been there for a long time. It's across sectors, and we have done time series charts on that. The other thing is what is driving it. I think that's more important than, what's the difference. And I think what is driving it is India is one of few markets beyond US and China where you have a large domestic market which is kind of immune to a little bit of whatever happens globally in terms of whether tariff, whether it's trade disruption or geopolitical tensions. And I think that's a big positive for us. And then when you put that together with the $60 billion capital which is flowing in, where savings is moving from your fixed deposit and real estate to capital markets, I think that creates a big stable factor. So I think all of that is quite positive. And if you look at just Nifty, right, PE, which is at 21, 22 times today, and compare it to S&P 500, are we not going to grow better than US? I think, GDP is faster. So I think just goes up in that direction.
So just a follow-up, do you expect supply to remain as heavy as it has been in the last couple of months? And the part B to that question is that do you expect the market to absorb it as well as it has in the last year or so?
So look, if you look at last year, it is an interesting fact. 1 out of every $5 raised in IPO market was in India, which is quite an aberration, right? You'll think. 1 out of every $10 raised as such an equity was in India. Now, whether it will continue the same ratio, no. But I think that will be more reflective of where US market will come up. But India, we think is a secular growth. I think it will continue to grow at high teens. If we are growing at double-digit nominal GDP growth, with the dynamism we have in our entrepreneurs, I think it's going to be like that.
Ravi, you're making me feel good about where I'm putting most of my money. So that's good from an India market perspective and a longer-term perspective as well. But Nitin, I'll come across to you. Where do you see a lot of excitement with regard to M&A activity? If I look at it in the last few years, there's been a lot of activity on cement, a lot of activity on infra as well. You had a couple of big buyers out there. If you pick a theme where there are, there's things are heating up out there, because when markets get dull or uncertain, there's a lot of inorganic growth that picks up. So any particular segment that you see?
So maybe a couple of sectors. So one, we see enablers of this India growth, which is infrastructure and financial services. So those two areas have remained active. We spoke about Japanese inbound investments into India, for example, in financial services. Infrastructure is very well owned by now institutional investors now, the infra funds. So that's one area. Technology, within that, IT services remains a favorite area for private equity because of everything that it has to offer, despite what we've seen on demand questions that were there last year. So we do see activity coming through. Healthcare has been very busy. We are underpenetrated on the services side, and we have a very robust, place around the manufacturing side. So we do see that continue to remain active. So there are different pockets to these segments where we will continue to see M&A. Now, within that, the flow of traffic, whether it's inbound, outbound, and sponsors, we'll see. Now, I think the last theme, which is quite interesting, is our MNC clients who are proactively managing their India portfolios. They want to use India for growth. They want to also use India for global growth in a way that, is there a path for us to monetize X% stake and use that capital to reinvest in another market? So these are active dialogues which will continue to drive activity across both M&A and public markets in our view.
Do you guys broadly think outbound M&A will people will be a lot more careful, right? Because there's so much change. You don't know who's going with who and who's talking to who. A lot of industrial policy as well. I mean, state-directed, almost deals, which people are trying to engineer, especially out of the US.
Yeah.
You think that'll be a function? Although I think one of you said that maybe into Europe there are more opportunities.
Yes.
The old legacy family businesses, etc.
Absolutely, but those are kind of, again, these are not multi-billion-dollar kind of transaction that people are going to do. I think these will be smaller capability acquisition, geographical expansion, that kind of stuff that we're going to see more than big bang acquisition. And frankly speaking, we don't need that. I think people are seeing so much opportunity in India itself from our entrepreneur perspective that they're going to invest their energy here. And the idea will be, can I get some additional capability outside India and then kind of bring it to kind of get an edge in this market?
Any thoughts on private market valuations? I mean, unlisted, where do they stand compared to public market valuations have they?
So they've remained, stable. I would say across sectors. We've seen, let's say, if you were to do the transaction multiples valuation, right, you will see they've been consistent. So they have not, let's say, not reached a place where they've come down sharply or have gone up sharply. But yes, we have that discussion consistently on price versus valuation. And we do see there are times when private transactions could happen, let's say, even at a slight discount to the public market valuations at times, right? Given you're selling a large chunk of a company rather than like a small block trade, right? So we do see that discussion. But again, in each sector, there's a different story on that part.
Okay, all right. Very interesting conversation, gentlemen. I think the sum and substance is that the deals market in India, M&A, ECM, it's thriving, it's alive and kicking and fired up with lots of action. Thank you very much for giving us a perspective on the same. Well, that's the JPMorgan view on investment banking and deals here in India.